how I short penny stocks using our funded traders playbook. So let's dive into it. Mike, it's all yours.
Thanks so much, buddy. Like always, I'm happy to be here, and it's a great opportunity for me to just share some of the experience that I got over the years, and also, let the others know about shorting penny stocks and the opportunity there. Alrighty, so we'll begin with that. Actually, as mentioned, I took on myself the challenge to really start shorting penny stocks for the last week, right? Just for the challenge. Usually, I've been trading for 17 years, and it's usually large caps like Tesla, Amazon, Nvidia, and such. Or like maybe 10 years ago, I used to trade mostly stocks in play. So I wanted to actually challenge myself and take this opportunity to just listen to our traders. As mentioned, we are an online prop firm for stock traders. So a lot of our traders really enjoy trading penny stocks and shorting them. So I said to myself, that would be a great webinar just to take the challenge, try it, and then share the information that or the experience that I enjoyed while doing this challenge and what I learned from it. So I'll start with a short intro. Like I said, been trading for 17 years, a little bit more, stocks and futures, mostly intraday. Today, I'm the CEO of Trader Pool. Been in the education field as well, developing risk management, and also the head of the traders in a local shop here a few years ago. And I developed also some trading automation tools for our traders, basically. Before I'll dive in, let me get to know you a little bit. Tell me, what are you trading? What do you like to trade? How long you've been doing it? Share some information so I will know who's with me on the line. That will be nice to get to know each other, and also it will help me while I'm going through the presentation to know if to go more deeper or to keep it more basic according to your understanding. So share with me on the chat or the question, how long you've been doing that, how long you've been trading, what do you like to trade? Would love to see that. While you're doing that, I'll move forward. And basically, as I said, I took some of our top traders, for example, like Sabrina, William, Luke. You can watch those interviews with all of our funded traders that we give them capital to trade with. We're doing interviews just to understand what exactly are they doing, and also to share that on our YouTube channel so you guys can watch it and learn from it as well. So I took 3 of them that I really enjoyed interviewed. And for example, Sabrina, she's mostly shorting penny stocks, but she's doing it on a swing timeline. So for example, she will hold the trade for 2 or 3 days, but she will start intraday to scale in and such. William, a young kid, doing an amazing job. And also Luke, that really enjoy finding the right assets on those penny stocks according to the catalyst, the news, and from there I found this rhythm. So I took those traders, I analyzed everything they do on a regular basis together with us, and from there I started to apply basically or implement their strategies, their way on risk management and everything around this. So that was the main challenge here. Shorting penny stocks using only our funded trader strategies, of course with real money, and documented everything in order to understand what I did right and wrong. And I'm going to share this one with you right now. Of course, if you have any questions, feel free to drop them in the chat, and I'll stop along the way and answer some of them. So basically, shorting penny stocks playbook, and this is how they operate, is looking for those setups, either delusion plays, shorting them after financial announcement when the stock is actually more likely to drop. Pump and dump, this is a classic one. I'm sure everyone is aware of that. Again, everything comes from the news, and we will talk about that. But a pump and dump will be more aggressive to the upside and also to the downside after promotional activity from the company. Technical breakouts, so that could be a place where the stock is popping up, reaching a major key level, and from there changing the direction. So focusing more on the action, the price action. And of course, some of them will wait, mostly swing traders that short in penny stocks will wait for the first red day. So they will look for multi-day runners and then look for the weakness, and from there short it and hold it for a few good days. So these are all setups and ways to look at that when you short in a penny stock, a small cap penny stock. And this is how they operate. So I started by just analyzing it and understanding what they do. So the first thing that they do is scan, of course, for the setup and looking for the right asset to trade. A lot of them are trading pre-market, not just regular trading hours. So they will look for through the scanners, either through our platforms or other platforms. They will scan and look for those that gapping up. Pre-market moving strongly to the upside, going up by 100, 200, 300% and more. So obviously that's the first thing that they will do. And after that, once they see that the stock is popping up, they will go to the news and try to understand the catalyst behind it, why the price is pushing higher. Now, when it comes to penny stocks, the pop a lot of the times will be faster than the news. So you will see a very strong move to the upside. The news will wait a little bit until you will see some headlines in order to understand what happened there. But you can definitely, or you should definitely watch those, because this will tell you, eventually you will learn it, and this will tell you that a news could be responsible for a pump and dump, while a B news will be something to actually hold a little bit or wait before you shorting it. You probably saw it a lot, for those of you trading stocks, you probably saw it a lot when a stock is popping up and then you think it's gonna drop, it's dropping just a little bit and then popping up again and then do the drop. So a lot of the times, if you understand the news correctly, you can basically execute better, because you realize that some news will push the price super strong, and there will be like 3 trends or 3 waves until you will see the drop. And some of them, we will look at the trades that I made in a second. Some of them will be just a quick pump and then all of a sudden the dump. So the catalyst and the news behind it is super important to understand. Once you realize that, you go to the volume and the price section and you analyze the chart, probably the way that most of us do. We're looking for a major resistance level, major support level, supply, demand, etc. We would look for a weakness in the price section. So bars like green candles are getting weaker, while the sellers are getting into position to start shorting the stock. We would look for identifying the risk. So where is my stop loss will be, and then scaling in and out of those stocks. Alrighty, so here are 4 of my biggest wins that I put just today and a few days ago that I traded. DARE, XXII, VLCN, and SBET. Let me know if you traded those as well, If someone here on the line that traded those in the last few days, let me know. It will be interesting. And each one of them, I wrote the play or the catalyst behind it, right? So for example, DARE, that was a classic pump and dump. And the stock, we will look at it in a second, the stock dropped from 10 all the way to 2 today. And the 70% profit or move was just in one day. XXII collaboration play and the second pump in a week. VLCN technical breakout, 2 hours, 230% of gain. And SBET, although it went from a very small cap or almost a penny stock, it went all the way up, and today it dropped very nicely. So I took a short there as well, and we will look at it now. So for example, VLCN. Okay, so VLCN, the company basically announced it's raising 500 million from private investors. And looking at the chart, you can see the entries and the exit. Basically, what I did is shorted it here. As you can see, hopefully you can see it. I can mark it, I think. Let's see. Okay. So this is the entry, and then those are the exits. So covering my short. Now the idea, as you can see, it's a pre-market move. The hours are in my local time, but it's basically, this is 4 a.m. Eastern. So we're talking about 2 hours into the pre-market session. And what it did, it bounced from around $10, tried to play it a little bit, and then started to move rapidly. I did a few things. First of all, I took a short at first here. And we will talk about it in a second, some of the mistakes that I made as well. So at first I took a short here, and then when it popped, I covered. But when I saw that the prices cannot break through a new high, and then I started to short it again. So it popped, dropped, entered, it popped again, and then couldn't make it. So in that case, it makes sense to me when it comes to looking at the price action that the price should decline. And in order to understand it better, you can look at the movement of the candles that's starting to pop, right? You can see all the big candles that move the stocks higher, one after another. In most cases, and this is something that I learned from them, in most cases, you won't see more than 6 up to 7 push to the upside. In most cases, it will decline on those, but it's not enough. You're not just looking at the pops. You also want to see a major liquidity level. And if we will look at the chart in a second, I'll bring out the chart. You will see that the area of $30, this area, is actually a major liquidity level from the past. So you understand that the pop should decline here because of the major level. The major level, the price action. We will look at the MACD, the MACD indicator that showed divergence. And all of those are showing us that the price might decline here. Of course, before talking about until where and how do I take my profit, we first need to understand how do I find the setup, or what are the parameters that will help me decide if I'm going in. So we'll go back here. Okay, so what I looked for is, like I said, the catalyst first, how strong it is, what is the momentum that comes from the catalyst, from the news. Then once the price reached a major level, I'm looking for a capitulation, volume increasing while breaking through the price, while breaking through a new high, the price action as we talked about. major liquidity level around the $30 and the MACD diversion, we can, okay, let's look at it here. So I'm going to VLCN. That will be easy to spot here. Before the major pop, that was a few minutes before the opening bell or an hour before the opening bell, there was this area of $30, right? I'll mark it and push it to the left, extend it to the left. I'm on an hourly chart right now, just showing you first what we want to look for, which is the major resistance level in that case. So going back all the way in order to find that place, right? The area where a lot of the buyers were before. So you can see the pop here, then here, a little bit, they tried to push it here, resistant, and this is basically the main area. Of course, when it comes to, especially when it comes to stocks that are pushing super strong up or down, we won't look for just a specific point, but it will be an area, and it's around the $30. Once I saw that this is the area I'm looking for, and this is the liquidity that sellers should get in, I started to look for the other parameters as mentioned. So I'm going into the 1 minute chart, right? And that was it. The price pushed higher. This is what we just saw. My entry was right here. I will zoom in just a little bit so you can see the volume increases as well. So price pushed. I took the first short that I took was here, and that was okay one, but I didn't reach, the price didn't reach the full potential and the full exhaustion. So I took a short here, but it didn't go all in, not with full risk, just because not all the parameters were there. And this is also something that's super important to remember when it comes to trading or finding the right setup. You want to have a few parameters, and only when you have everything aligned, then you realize that the chances for it to succeed are higher, right? So in that case, when I took the first short, I was missing the liquidity level, and then also the divergence in the MACD, for example. But once it popped and reached that liquidity, look at the volume, which is incredibly high. And this is something that shows capitulation, right? And then the pop here on the major resistance level. And look at the MACD, the MACD indicator that shows the opposite of what we're looking at the chart, right? The price going up on the chart while the price declining on the MACD, or the highs declining on the MACD. Once you see all of that and you understand, and you already popped by 200% or so, you realize that the chances for it to drop are higher. So I took that short from around here and then covered, as you saw on the chart. So this is basically what I would look for, and this is what they looked for, our guys. So if they do that, then I can definitely trade it, as I saw they are doing great. So this is VLCN. Second one was SBET. That was also from today. And you can see the same patterns over and over again. So price moved higher, reached a certain point when it should decline because of the volume, the capitulation, price action, major key level. And then when it dropped, you can start scale out from the position. Hopefully we will have enough time and we will talk about how to scale out correctly. In this case, we can also look at SBET. So I'm on a 1 minute chart, right? And that was when I shorted it. It's also was on pre-market. So roughly yeah, like 2 hours, 3 hours after the pre-market opened, and sorry, an hour and a half after the market opened. And again, it popped up very nicely from around 37 all the way to 43. And then when it reached a major key level, we will look at it in a second, and volume started to increase at the top, then that was the key for me to dive in. Again, in this situation, as you can see, there is no diversion in the MACD. So one of the parameters are out, meaning the setup is, the quality of the setup is a little bit less than the usual, but still you can see the volume increasing at the top, meaning a lot of the buyers are coming in thinking that the price will continue to the upside. Sellers can come in and can sell them or short on them, right? Price declined after that, and that was a major move to the downside. If I'm going to the hourly chart on SBET, you can see that it started to move roughly 2 weeks ago, started to move from $9 all the way to 45. Going back, you can easily see the resistance, the major level that should have blocked the price from continuing higher, right? Let's mark the area just so it will be easier to spot. And that's basically it. So you got the area here, the support that became resistant. We tried to push higher here as well. That was another key level. So if the price will pop more, the next resistance level should be the one that we just saw. Sorry, I'm not a great painter. So in that case, you can easily understand that once the price reaches that, after you did all of that, and you're dropping down to the 1 minute chart, and you see the volume increasing, you can understand that it should decline. Of course, not all the time you will know that it's supposed to decline right at the price that you're looking at, right? For example, in this case, although I didn't mark it like on the dot, you can see that it did pop before, played with it, and only after it played a little bit more, then it started to drop, right? So that was SBET. Another one that we can look at is DARE. And if you look at the right side of the presentation, in the slide, you can see that the same concept, the same parameters are going over. You can see them over and over again. You're just changing the symbol, but the idea of how to trade it remains the same. And in this case, DARE was a classic pump and dump. Phase 3, great result. In most cases, phase 3 will be, you know, after everyone already understand that the stocks should go up. So in that case, you will see the drop, right? Again, we have a nice move to the upside coming from $2 or $3, popping up a few times, trying to break to a new high right here, trying to break to a new high. Then the volume increases, high volume coming in once you at the top. Doesn't make sense that you will see so much volume coming in when you're at the top of the break. In most cases, it will be just a manipulation. And once it's showing more weaknesses, then you go in, added a little bit more, and then covered along the drop. We'll see in a second. I did a major mistake here, and I'll show you in a second. But that was my key to get in, or the parameters that I needed: capitulation, volume, price action, major key level, MACD diversion. Let's look at that here on the charts. So first of all, going on an hourly chart, going back a little bit or a little bit more. Let's see if I can, yeah, let's increase that. So going back, already marked the level from before. Let's take the daily. And you can see the major level at around $10, right? It's super easy to spot. It's starting from here, support, another one, and then the drop. So it makes sense that if we will pop to this area, and again, in most cases, I will mark an area like a triangle, rectangle. So in this case, it's between 9.88, 10, a little bit higher than $10, but you can easily spot that this is the area it should drop from, right? And this is also something very important that I saw that our traders do. They are looking for that simple moves, the simple way to find those liquidity levels. Once you understand that and once you see that, it's much easier to trade them because it's not complicated. You're not looking for a unique level that no one is watching. You actually want to trade something that a lot of the guys are watching, because then you will get the reaction. So 1 minute chart that I'm looking at, again, pre-market move, a few, like 30 minutes, 15 minutes before the opening bell, pop to the top, resistance, another one here. Now you can say maybe you can short it from here or maybe from the second pop. What I missed in this case, and this is why I waited a little bit more. First of all, the phase 3 news actually pushed the price very strongly to the upside, and also there are no volume and no diversions in the MACD. So I actually wanted to wait just a little bit more. It popped again, volume coming in. Look at the volume once the break is occurring, right? A lot of the guys are actually looking to go long on this situation. And this is why big players are coming in and selling or shorting the top, right? Because many of us will know that you need to have a pattern or high volume when you're breaking. So a lot of the guys, new guys, are looking to buy the stock. But at the end of the day, when a lot of them are trying to buy, that's exactly the moment when smart money can get rid of the stocks or the shares, or actually just going short. So high volume coming in at the top, resistant, and you got the MACD diversion, price is declining on the MACD while it broke to a new high. Same situation as you can see it, and it's occurring every day. That's incredible to see that every single day you will find those stocks. So it's also super easy once you understand the setup and what you're actually looking for. It's pretty simple to spot. And going for the last one, XXII. So that's also a nice trade from today. The stock is popping up, many percentage up, as you can see, coming from around $5 all the way to 12, right? And then you can see easily, as you just saw on the others, you have the first pop that start the move, another one, and then on the third and fourth, it's becoming weaker. So of course, like always, we want to see a major key level, volume. I will zoom in a second and show you a volume coming in at this area when we're at the top. Now, not when we started the move, but actually when we reach the top, the major resistance level. And then if you got the MACD, is always great to see as well. Another great indicator that will show you that the price should decline. So let's have a look at that, XXII. The report was on collaboration with tobacco companies. Alrighty, and I guess tobacco companies are not that great for the stock. So it popped from, like I said, 4.5. It was also, in this case, the major resistance level was actually a few days before. Look at the pump here, and then another drop. Same thing happened here. Pump, reached the top, new high on the $13 round number, and then the drop. Zooming in, you can easily see the same concept, the same patterns that we just talked about, right? You have the pump, it broke this triangle, high volume coming in, has it breaking the $13? Couldn't do that, couldn't break through. A lot of the guys that are looking at it, especially new guys that coming in and trying to trade penny stocks, because obviously it's super exciting and they can make 100% in a day. So they buy in when it's breaking the 13. And this is the classic move for smart money to drop their shares or to go short in this case. Volume coming in, very nice volume at the bottom. And then you can easily see also the MACD with the nice diversion dropping while price increasing or getting to a new high, volume and everything we just talked about. And this is also an easy one to spot. It's always repeat itself, and this is the beauty of it. You can actually find even from tomorrow, you can actually find those stocks and do your trades, or at least try to play with them. So these are the setups. Try to remember that. I'm sure if you will start watching it, it will make sense to you. And after you just after what we just talked about. So a few mistakes that I made, and this is also something that they talked about. The guys, our funded traders that I interviewed, they also talked about those things, and I did the same mistakes. So I want to share with you because they are super important. One is the mistake is not leaving a runner, right? And this is actually something that I've been talking with my guys a lot of the times. And on my trading, like a regular trading, I will usually leave 10 to 20% of the position to continue to run, because you will never know in advance if the stock should decline much more or finish and continue to pop right after you took that short. So for example, we just saw XXII, and if you're looking at the numbers here, the prices, so I took that short at the top, right around this area, but then my covers are here, 1015, 1094, so around this area. And look what it did after that. It went all the way to the 650 area. So I left a lot of money on the table, right? So in this case, we need to do one important thing and keep some of the position on. Of course, I don't know, like I said, I don't know in advance that it will drop, or maybe, I covered and then it would go to a new high. But if the setup is super strong, like the entry setup is super strong, A+, you got all the parameters, the capitulation, volume, price action, major key level, MACD diversion, then the chances are you will see another continuation. And this is not just a reversal, but actually a new trend that starts, right? So when you have a key setup, like A+ setup, you want to leave some on the table. A lot of the times when I'm looking at our traders portfolio, our traders just performance, I see that a lot of the times they could have made much more than exactly as I'm showing you right now. They could have made much more by just leaving like 10-15%. The reason most traders won't do that is just because they are too scared to lose that trade, or even if they took a profit, they don't want to make it smaller, so decrease the profit. So in that case, what I would recommend to do is just start by leaving 5%, right? At the beginning, when you leave 5% on the table, so let's say I took 2,000 shares, right? I can leave, instead of covering everything, I can leave just even 100 shares to run and let it show me over time, let it show me that it's actually working and I should do that, right? Once you are aware of that, and once you prove yourself that most of the time it will drop, or like 70%, 60%, and it makes sense on the risk side, then you realize that, and your mind is set to actually increasing that So instead of 5%, after 3 months that you're trading and leaving 5% to run, you're increasing that. You see that it makes sense, you're increasing that to 10, makes sense, increasing that to 15, 20 and such. So that's just a psychological aspect of teaching your brain to get used to the fact that the stocks should, in most cases, will decline more than what you took. It's not an easy task at first, but because you are only leaving 5% at the beginning, it will be much easier for you to commit to those 5% instead of leaving half of the profit. The worst case scenario, you lost on that 5% or maybe just break even. Alrighty, that was one mistake that I did today. Don't do that. Second mistake, going in too soon. Okay, so I showed you the first trade that I took on VLCN. So the second one was here, and then I took the drop, but the first one was right here. And I did enter pretty soon. And like I said, the major key level was here, and the diversion, the main diversion was also here, and also the volume, the diversion in the MACD and the volume. But I actually took that first trade right here, and obviously I lost it. It bounced strongly up. So going in, you want to go, you want to wait for that setup. And this is obviously something, again, hard to do because we are traders. We're looking for that next click on the mouse key. We want to trade. But if we are waiting for the right setup, the chances are obviously that the price, the setup to work and eventually increase the success rate. What you can do is also, that's also an hack, a trick that you can do. If you are fast on the keyboard and actually cannot wait till that trade to get you the A+ setup, and this is, let's say, a B+, what you can do is just take, again, a smaller size instead of going all in, right? So in this case, and this is basically the third mistake that I did on that trade, which is going too heavy at the beginning. So I took 1,000 shares here, a stock that is moving, a few hundred %. So I took 1,000 shares here, and that was too heavy. Instead, if I decided to go in on let's say a B+ setup, right? What I should have done is take it a little bit slower, and that way, if it pops up against me, I can either add more to the position because I'm within the risk dollar that I'm willing to lose. Let's say I'm risking, just throwing numbers, I'm risking 50, I'm willing to lose 150 on a trade, right? And instead of risking 150 here, I can do 75. I can risk 75, let's say. And then when it's popping up, I will risk another 75, and then I'm good with my 150 loss. So either that, or just cover the at the stop, at the top of the range, the high, and then you're done with that trade, waiting for the right setup here, and then starting to execute again. So once you're doing that, once you again start small and build the position, you give yourself a lot more room to be wrong on your entry, but still continue to hold that trade because you didn't risk the full amount that you were willing to lose at the beginning. Hopefully it makes sense. I see you guys are writing. Keep them coming, and I'll go over that hopefully if we'll have a chance. Okay, so these are the main mistakes that I did. A lot of them are doing the same, and I'm sure a lot of everyone here doing the same too. So try to take those tricks and play with it instead of convincing yourself that you gotta stop doing the wrong thing. You actually need to prove your brain and train your brain so it will stop doing that, right? It's not 0 to 100. you got to build it. So start by 10, 20, 30 and such. Alrighty. Okay, so we are talking about, like I said, position sizing, hard stop, and this is something that will break a little bit of myths, but hard stop are out. So a lot of the guys are putting stop losses in the system, like a hard stop, and that could work for some. For me, I actually prefer not to do so because I rather manage the trade and the risk so it will fit my style. So as I mentioned before, you know, when you're looking at the chart, or as we talked about before here, if I'm entering that trade and I'm actually entering with a smaller size, I'm giving myself the opportunity that even if the price will pop up again against me, I'm still okay because I'm not risking the full amount, right? The full risk that I'm willing to take. And that's the main thing. Again, for me, maybe one guy will put his stop loss here, enter here, right? Put his stop loss here, and he's done after the pop. For me, it makes more sense, and what works for me for many, many years is basically taking here, if I'm taking a B plus, is taking here 50% of the risk, or even lower, depends on the setup, right? Risking only $50 out of the 100, and then when it's popping up, here it reaches $80 loss out of 100, which is great for me because I'm willing to lose that 100 and I'm only losing 80, right? So I'm okay because I entered with 50% or less than that. Alrighty. So moving forward. Okay, so hard stop, liquidity awareness, of course. You want to find stocks that are actually moving, that you can see liquidity. The spreads will be a little bit tighter than those that are not, and then execution will be better. And the catalyst, as mentioned, you got to find those catalysts that are actually making sense, understanding them. And this is, by the way, not just for penny stocks. If you're trading, maybe not large cap, but if you're trading stocks in play, right? Stocks that are gapping up or down, but they are mid cap or so, or, you know, even large cap, maybe not Nvidia and Tesla, but other stocks that are popping up or down because of earnings, because of new product, layoff, investigation, whatever it is. Once you understand what is behind the catalyst, what's behind the news, then you realize how strong it should continue to pop, or what are the chances for it to start dropping from here, right? Is it a pump and dump or delusion? Is it something that could break through a new high and go to the next major key level, or it will drop from here? So understanding the catalyst is super important if you trade in penny stocks, if you trade in on stocks that are basically gapping up or down, so stocks in play. Okay. Lastly, try to adopt those techniques. Okay, start small, master one setup. What I showed you today is literally one setup, right? It covers the pump and dump and the delusion and everything around that. But at the end, it's the same setup. The push to the upside, looking for that stop, that resistance level, the liquidity that will stop the buyers from coming in, the catalyst behind it, MACD diversion, volume coming in, price action that shows weakness, and everything that we just talked about. And once you focus on one setup, it's much easier for you to become a master in it, right? You learn, you develop it, you understand the nuances, and from there it's easier to execute. And by the way, when you already understand, for example, I'm going back for XXII. right? So I shorted it here, right, when it popped. But you can actually, and this is a classic reversal. But generally speaking, so that was my short. But generally speaking, you might be a pullback guy, right? So you can look, if you go to a higher time frame, let's say, let's try the 5 minutes even, right? On a higher time frame, it's easier for you to spot the pullback after the drop. So that was the drop, it's pulling back. That was one key level that you can enter. And of course, the second one, another pullback going into the support levels here, and then the drop. So it doesn't have to be a reversal, aggressive reversal when you really catch the top, but actually once you understand that from here it should decline, then you can start looking for those setups of trend following, right? So that's the idea behind it as well, or a break of that support level, right? Okay. So the setup, obviously document everything, trade. You can use any type of trading journal. Trader Sync is one of our good partners. You can use also Trader View, VUE, also a great partners of ours, and just do the maximum, get the maximum out of it when you're actually tracking it and building your own unique way with tags and all the information you can add on top. And of course, always better to trade with a community. And in this case, our funded traders community. You guys can see us on Discord and live YouTube channel. We are very much out there and looking to support our traders. And that will be the key for us. Trade a pool, if you want to join us and try it. Trade a pool is basically a limited risk trading, meaning you can put $50, $100 into the test. Once you trade and pass an evaluation, as we call it, a challenge, a test, you become a funded trader. Of course, there are rules, there are parameters that you need to follow in order to do so. But once you understand the benefits, I mean, it makes sense. If you're paying $100, you're getting 25K to trade with. It just makes sense instead of doing it with a broker. I'll go over some of the questions, and if you guys have anything else, feel free to put them in the chat. Okay, Mike. Now I'm looking at VLCN. Once backside confirm. Okay. 500 shares, nice. Alrighty. Amazing, Mike. So you do that, traded NUME. Let's look at that for a second. Anthony, do we have time?
We're actually at time.
At time. Okay.
Yeah. So, can you share the audience of how they could get a hold of you and everything?
For sure. So guys, if you want to check us out, go to tradeapool.com. And again, you can go to our website. We have, you can send us an email, help@tradeapool.com, and check out our YouTube channel, live trading room that we're hosting every day. And if you go to here, when you're going into tradeapool.com, go to trading VOD. We got tons of hours of live trading, funded traders interviews. You can learn a whole lot from them, the guys that actually made it, got paid, and everything around it, the way they trade. So definitely check us out, and you can test us for 14 days. You got a free trial, so feel free.
Thank you, Mike. Outstanding presentation. The audience has said how great you are. So we appreciate you being here. Outstanding way to kick off the summit. Huge thanks to Michael for the detailed breakdown. And go to his link.